our business segment. For that, I'm joined in the studio by Sharon Gaffney. Hi, Sharon.
Hi, Haxley.
You've been looking at how Omicron is hitting companies around the world, hospitality sectors, private, public. Tell us a little bit more.
Yes, and the challenges posed by the spread of Omicron, they've prompted some economists to actually cut their growth forecasts for early 2022, anticipating continuing worker shortages and reduced consumer spending. So far, the variant hasn't driven jobless rates noticeably higher, but it's already taking a toll on businesses, as you've been hearing, with a growing number of staff homesick or quarantined. The travel sector has been particularly hard hit. Thousands of flights were cancelled over Christmas, with the blame being placed firmly on increasing COVID cases among crews. Some American airlines are now offering to pay their pilots and flight attendants double or even triple their usual salaries to take on extra flying duties through most of January. They're hoping the seasonal decline may be sharper than normal this year because most business travellers, of course, do remain grounded. Now, almost 4,500 flights were cancelled around the world on Sunday. Over half were services into, within or out of the US. Globally, more than 17,500 flights were delayed. Well, already today, there have been over 2,500 flights cancelled, and many governments are now moving to try to reduce absence rates by changing quarantine rules for those who test positive for COVID and for their close contacts. Here in France, the isolation period for those who are vaccinated and have the virus has been reduced from 2 weeks to 1. In Spain, it's been cut from 10 days to 7, and in the US, it's now down to 5 days. Well, as you heard there from Benedict, record numbers of infections in the UK over Christmas have led to large numbers of people there self-isolating. The British government is asking ministers to develop robust contingency plans for workplace absences. It says rising case numbers could lead to a worst-case scenario of up to a quarter of all staff not being able to work. And the National Health Service and schools are already feeling the impact. NHS hospital staff absences due to COVID have nearly doubled over the past month. And on New Year's Eve alone, nearly 1 in 10 staff, that's more than 110,000 people, were absent. Schools are now being asked to merge classes into larger groups and to consider flexible teaching options. And this comes, of course, as the UK is already suffering labour shortages across the economic spectrum as a result of Brexit.
And in other business news today, crisis-hit property developer Evergrande is back in the spotlight.
Yes, the Chinese real estate giant once again suspending trade in its shares in Hong Kong as investors await updates on the firm's restructuring plans. The company has more than $300 billion of debts and has been struggling to repay bondholders. It's been trying to raise cash by selling assets and shares to repay suppliers and creditors. Time now for a very quick check on the markets. Well, with some major markets in the region closed on Monday, including Tokyo and Shanghai, shares in Asia were mixed as 2022 trading kicked off. In Europe, most of the markets have now opened. London, however, is closed, but the CAC 40 and Frankfurt are both up so far. Finally, for me, champagne may be losing its sparkle. For the first time in a decade, the EU has recorded a drop in exports of sparkling wine, and that's largely due to a massive fall-off in global demand for champagne. Sales of the bubbly drink are down by 20%. So bad news for French producers, but the picture is a little rosier for regions exporting Prosecco and Cava. Sales of those drinks have actually increased by up to 10%.
Not bad at all. Sharon Gaffney with a look through the day's top business stories.